Hello everyone. Thank you for attending this webinar. And this is SeeWing Yee from the Yee Real Estate Network. And my guest speaker, as a matter of fact, he's coming back for the second time, Mr. John Show. He will talk about, hello John, thank you for being here. And I know your time is very, very challenging and all that. So we're gonna make the best of our webinar and presentation. We truly believe the value and the content of this webinar will be very, very thought-provoking. So again, the objective of this webinar is to have John Show, one of our Yee Real Estate Network investor member, going to talk about his personal experience. He have done it previously, sort of a part one of the presentation several months back. Now he can talk about a high level about his real estate journey into his deadline of financial freedom goal. But before we go, we're gonna go over the content, and John gonna share the screen on a PowerPoint presentation. So from a high level, years ago when I started this real estate investment club business, I kind of I don't know how I found this formula. Maybe I created it on my own. I'm not sure. I mean, but my formula for success for real estate investor is the numerical formula. It's called 10-10-10-1. Now, 10-10-10-1 means buy 10 investment properties with financing, retire in 10 years, and achieve $10,000 of monthly passive income without any debt, without any more mortgages, and have $1 million of net equity from your 10 investment properties. Now, as we fast forward 2021, you know, we all need to understand that things change, goals change, the times have changed, and consequently, my numerical formulas for real estate investor retirement goal is changed. What I mean by that is, instead of 10-10-10-1, I mean, moving forward for the rest of this decade, 2021 and beyond, for the next 10 or so years, my numerical formula could be 10-10-2. Instead of $1 million net equity, could be $2 million net equity. As you know, real estate prices has gone up dramatically over the years, especially the past 4 months. But so 10 investment property is still the same, at least, right? Financing $10,000 monthly net income, probably giving the changes could be $15,000, $15,000 monthly net passive income from the cash flow portfolio, and then retire in 10 years. And then instead of 1 million, 10-10-10-1, 10-10-15-1, and not 1-2, at least $2 million net equity, right? So because the average price of investment properties moving forward today is around $200,000. That's the benchmark, right? I mean, so anyway, okay, I'm done with talking. So without further ado, Mr. John Show will, like I said, will share his screen, and he will do his presentation from a high level, numerically speaking. He'll share with you the challenge of him, pursuing this journey. And, it's not, okay, he's gonna go over the details. It's not all gravy. It's not all good stuff. I mean, there will be some challenges. So the mark of a successful real estate investor, so you can overcome crisis, you can overcome challenges. Not all your properties can do well, so is your ability to adapt, overcome, and have a positive attitude in all those attributes that are needed for a successful investor. John will talk about it. His journey is not over, it's kind of ongoing. So without further ado, John Show, share your screen and take it away.
Awesome. Thank you for having me, Mr. SeeWing, and hello everybody that's listening. So we've got share screen on. I'll go ahead and pull my slides up. I like to have some structure to my talk, so I'm not going off the rails. Let's see.
Understandable.
Okay, here we go. That's me on picture day. Okay, so I'm just a normal guy. I mean, I'm not getting paid for this, or Mr. SeeWing didn't put me up for this. So I've basically known Mr. SeeWing for a few years now, and through my journey, he's been pretty close through the ups and downs, and wanted me to kind of give a high level summary of what that looks like. So here we go. All right, so we all begin at one point where it kind of triggers in our mind that, hey, we need to start looking at how ways to create passive income, right? Whether that's something that you want to pass on to your other generations, your children, or if you want to kind of escape the 9 to 5 or 8 to 5, 40-hour work week, or more, right? Silicon Valley, 40 hours is probably a thing of the past nowadays. So I'm a Bay Area native, working guy, and worked in tech and family man. I got a couple young kids, 3-year-old son who keeps me very busy, and a 1-year-old daughter. And so after I had my son, I'm like, hey, how do I pass on a legacy to my son and my kids, and how do I create passive income? That's something that's just, it's like a spigot that's open, right? You open up the spigot and the water keeps dripping out. And there's a great book that I told Mr. SeeWing about called Parable of the Pipeline. And what we're thinking about is, from a financial perspective, how do we start laying pipelines and opening those pipelines so they start dripping and creating this passive wealth for us? So since 2000, I was in the corporate world. I worked in environmental health and safety for high-tech companies. Basically, that means that keeping these companies out of trouble when it comes to all sorts of environmental regulations and OSHA regulations in California. So as of May, I left my high-paying job at Facebook, and I joined my new venture with Keller Williams Realty in June. And we can talk a little bit more about that, but I'm the happiest I've been in years. So it was a great choice for me personally. The other thing that I was starting to think about was, as I started having these jobs and additional income, I worked at Apple for 10 years. And so automatically I was maximizing the employee stock purchase plan. That's just the easiest option out there, because you're getting it at a discounted rate. So if you're not taking advantage of that, I would say definitely look at your company's position and utilize that with extra money if you can from your paycheck, because that really allowed me to do this move into real estate with investing. So diversifying funds, how do I not get so stock heavy and kind of put my eggs in other baskets, and real estate being one of those baskets? So in 2019, I went to several local real estate investment group meetings, trying to find what's out there. This is pre-pandemic, obviously, and where I felt like I would get enough information to make an informed decision, and also the group being personal enough where I could get questions to answers and have direct communication with the team. And so this is where I met Mr. SeeWing and his seminars. And one of the topics he talked about was the Buffalo, Niagara Falls, New York market, which I'll talk about a little bit more in depth. Touched on Florida, Ken Renner, of course, in Texas, and then also touched upon in Vegas. And then he also had some speakers on self-directed IRAs, which I did jump in as well, and have a previous Zoom recorded meeting about that goes pretty detailed. If you're interested in looking at that, please ask Mr. SeeWing. We're not going to be going into that level of detail today. So after I went to several different meetings, I kind of looked at evaluating, like, what do I want to get out of my investments? And so basically, as a first-time real estate investor, you're gathering information, right? You're listening, you're asking questions, you're talking with other peers, people who have been down the road before. And this is a great line in The Millionaire Real Estate Agent. I'm actually reading the book from Gary Keller, and there's a line in there where he says, it took like, I don't know, 100 years ago, they finally discovered Mount Everest, right? And there was one person that did it. And when they did it, it took the second person only like a year to accomplish what the first guy did. which it took, 100 years for somebody to even do that. So basically, exponentially, once people start doing the path, all of the other people that follow have a much easier journey because the path is already laid out for them. So that was kind of like, wow, that's so true in real estate, and that people have been down this path. Let's learn from the people that have done it. Let's learn the route to take. And it speeds up the process so much faster. And now with online, you can get access to information with real estate education, books, podcasts. I mean, Bigger Pockets. I know a lot of folks listen to those podcasts, and that's something that I listen to as well, in addition to Mr. SeeWing. And then, of course, Robert Kawasaki's book with, I'm losing a blank right now. Everybody's read the book.
Rich Dad Poor Dad.
Say again?
Rich Dad Poor Dad.
Yeah, the Rich Dad Poor. I don't know how I forgot that, but anyways, there's just so much content out there. Everybody knows, everybody's familiar with it. And so this kind of like really sparked me to like, okay, let's get motivated here. What are my goals? Do I want a monthly cash flow, or do I want an equity gain? And the equity gain to me was kind of going to be a long-term plan. And so I thought, if I can do the cash flow and start banking some money monthly, that will allow me to do the second phase of the investment with maybe a larger purchase and an equity gain longer term. So I went with cash flow. And so what was my level of risk? And so after I do a lot of education and self-learning and talking with people and Mr. SeeWing's network, who were great at providing information, I said, okay, well, personally, I know I have to take action. And that's like the hardest part, is taking action, right? You have all this information. Some people can get lost in all of the numbers and all of the details, and just kind of keep going down this path where you just keep digging this hole. And so for each person, this level of risk is different. So I looked at some options. Okay, you can protect yourself as a landlord with an umbrella insurance policy, or you can start opening up LLCs and roll properties into LLCs. For what I looked at for time and money, I thought, okay, well, my insurance coverage will add the umbrella insurance for like, it was pretty minimal. It was like $500 more a year to be fully protected, all the highest coverages, and like $2 million of liability coverage. And I'm like, hey, that's great. And they would handle any of the lawsuits or anything up to $2 million. So I felt, okay, pretty confident after hearing one of Mr. SeeWing's insurance agents speak about her experience with landlords. I think she said in like 30 years, maybe she had one case that it landed under, I think it was like $1 million of some sort. So I felt pretty good about, okay, $2 million coverage sounds good. Let's move on to the next step. Run the numbers. I didn't want to stretch things thin. And what I mean is I knew I was going to be taking out mortgages to be able to finance these loans using other people's money. We all hear about that. And so my thought was, okay, if I can max out at 10 loans under my individual name, my wife, she could open up 10 under her individual name, we could really get the investment scheme going. So I didn't want to over execute in terms of my level of comfort, my level of risk. So I always had in the back of my mind, if worst case scenario, none of the tenants paid for any of the rent, how long would I be able to hold on and cover all of the mortgages? And so I felt pretty comfortable that I could hang on, but that scenario with COVID now, that this was pre-COVID. So we'll talk a little bit about how COVID has kind of changed the landscape. But I felt comfortable that this was something that I was getting into, that if things went sideways, I'd be able to have a few months to recover or get out. And that's something, could I carry the loan and cover expenses? So additionally, with COVID now, that really for landlords, I'm experiencing it where, a lot of the blue collar neighborhoods where we invest in, a lot of folks unfortunately lost their jobs. And we still, as landlords, have to cover the mortgage, right, on a monthly basis. And the distribution of funds is super slow with the government process right now. And each state is considerably, I think the numbers for New York were really sad in terms of how much money was being distributed to tenants. So talk a little bit more about that, and I will, but I want to keep going so we can get through some of the action items. And then with pro formas, you're always seeing pro formas for different properties. Super important that you look at these, but also take it with a grain of salt. There may be some things, some expenses may not be on there. Some expenses may be added on by the state later, like New York. Like, oh, hey, we're going to be adding this new landlord registration fee. Okay, it's only, $50 every year or 2 years, but it's something you should know for each property. Additionally, hey, your garbage rates are not going to be paid out of your property taxes anymore. We're going to bill you directly and the fees are going up. So you have to, again, don't stretch. I made sure I wasn't stretching myself thin. I allowed a buffer on the pro formas, taking those numbers just, with a grain of salt. And then make time. This is super important. You have to make time in order for return on investment on anything. And so basically just finding slots in the day, at night, if you take a shuttle into work. Well, with COVID, it's kind of changed things, but looking for opportunities to do this is super important and making it a priority in your day. And I joked with Mr. SeeWing on our last meeting that, hey, you're going to the bathroom every day, right? Hey, how much time is that? How many minutes is that? Hey, get your phone, start doing some research. Don't stay on there too long, but do your research. That's time. He likes that one, I know.
Yeah, John. I talked to a lot of investors over the years, and some of the excuses that I hear, it just boggles my mind. Oh, I don't have the time to invest in real estate. I mean, I understand that, but I'm promoting turnkey real estate. We have done most of the work for you, so you cannot use that excuse. Then I said to myself, each person is different. I mean, we go to restroom like 6, 7, 10 times a day. And
whoa, man!
Some of us. I mean, each time,
indigestion problems there.
I know. Well, personally, I'm older than you, so I have to go to the restroom. Okay, it's not.
That's a lot of time, though, is what you're saying. You're saying there's a lot of...
at least 1 hour, right? At least 1 hour per day, you spend time in the restroom. But so for anybody to have excuse to have no time to get into real estate, to me, this is such a cop out. But anyway,
yeah. Well, just a disclaimer. Don't spend too much time on the toilet. It's not good for you. That's speaking from experience. So I'm not going to go any further into that.
Okay, go on. Sorry, I digress. Let's go on.
So making time, finding those slots in your car during lunchtime, escaping, getting the kids some daycare or some childcare where you put in some time, an hour here, an hour there. It's going to add up. Focus and initiate with the first transaction. The first one is the hardest. It's called breaking the ice, right, Mr. SeeWing? And I'm sure you see a lot of investors get hung up with all of the research and details. And then when it comes time to pull the trigger, it's a mental barrier. You got to cross this line because there's this fear factor.
Yeah. Yep. Yeah. Fear factor is correct. Analysis by paralysis, one of those things.
Exactly. So, you get to a point where you've done your research, and then the next step in your journey is basically picking where to invest in and doing it. So I started with one duplex in Niagara Falls in, I believe it was April of 2019. And I set a goal for myself. You probably can't see it because I think our video is covering the part of the slide, but my goal was to close 7 duplexes by the end of 2019. And I did accomplish that. And so I went with the duplex just as, let's say, kind of like an insurance covered policy, because if one tenant couldn't pay, at least I had got a second tenant that could carry the mortgage on it. And so the first, so I was just, after I did one, I would do a bunch of research I had a home inspector in the area. He was my eyes and ears on the ground. He would get me pictures and videos. I'd have conversations with him, and I never went out to these properties. This is a big this is a big question of debate. And this also goes back to your level of what level of risk are you able to do, you know? So some folks go out to the properties, drive, inspect them, you know, more than likely you're not going to be able to get into them if they're tenant occupied. So just keep that in mind. But, you know, they do inspections of the outside. They could go on tours with the Kanazi family, showing you kind of how their process works with renovations and whatnot. But for me, with my time, I said, hey, I'm going to hire somebody. My money is well spent. I'm going to have eyes and ears on the ground. They're going to report back. And the home inspectors, they can get into the houses, by the way, obviously, right? So they're going to be making that schedule with the tenant to get in, to take pictures. And so you're going to get in the inside to really see the condition of the properties. And you're going to get a professional opinion on what the condition of these are with plumbing and electrical and what needs to be done, if any. So with the Buffalo Niagara Falls market, specifically Niagara Falls, yes, they're older homes. They've got brick basements. They're built like, you know, they're built tough to last. And most of the things have been done to them with electrical upgrades, the roofs. However, maybe because they've been tenant occupied for so long, maybe some of the interior plumbing hasn't been done, right? So these are things that you just keep in the back of your mind, that things that need to be fixed down the road. But you know what? Prices of the properties for duplexes at the time were so low. I think anywhere from 50 grand to 55 grand was the most I paid on a duplex, and cash flow was, I think on the 55 grand one, cash flow was spec'd out at 1100 or so, which I did see. So the recommendation for the property management company at the time, and this didn't come from Mr. SeeWing, it really was a learning experience for me. It's so important to make sure that you have a tried and true property management company. So as soon as I started getting all these duplexes, there was some issues with distribution of rent money. And it caused me kind of really a lot of concern, and communication was poor. And I ended up not getting paid for, after the first month, they didn't distribute on time on the first month. They didn't distribute at all. And it was very sporadic during that time. So after the first month, I'm like, time out. This isn't how things should be working. And so I made an immediate change, and I canceled all of the contract for that property management company, and I rolled it. I had a talk with Keith Kanazi about the situation, and he was willing to take on all the Niagara Falls properties under his domain for property management, because back then they were only managing the Buffalo market. So maybe things have changed now. Maybe they're taking on more of the Niagara. You have to follow up with him.
Yeah, John, just a quick note. The outside property management company, which we no longer use, that's the company that was managing your properties 2 years ago. But since then, we no longer use that company, because they have a lot of internal issues. It's a mom and pop property management, so they went their separate ways. They may have been went bankrupt, out of business. I'm not sure, but currently our in-house property management company, they are connected to the turnkey provider, Buffalo Turnkey, Keith Kanazi. They have an in-house property management. They are managing both Buffalo and Niagara Falls, so they learned their lesson. So they're not gonna recommend other property management. They're gonna do it in-house, like they should have been initially. So unfortunately, John, you have to go through those kind of challenges, and hopefully, this kind of things that happen not too often in other markets. The other markets are, the properties are a lot better, the tenants are a lot higher, so forth and so on. But this kind of things, John John's show is just being transparent. He tell it like it is, which he should, right? So as an investor, you need to, take the good with the bad, and solve the problem and move on. So okay, that's all I have to say. John, go ahead, continue. Sorry to admit.
Yep. No, those are some good points, and I think it's important for other investors, if you're starting to feel uncomfortable with your level of response that you're getting, or if something's not right, you need to take action sooner than later. Because as an out-of-state investor, you really need to be connected with how the process is working for you for the long term, so things are seamless, and you're not having to, manage your property manager, as they say. It's the last thing you need.
Yep.
So I did switch over to ABC Property Management, which is under the Kanazis. To give you a breakdown, so there's 7 duplexes, right? So there's 7 loans, which equates to what I have to pay is on all 7 loans, it's $3,000 a month through Wells Fargo. That's just what I owe. And so I was looking at an average of about $20,000 down payment per duplex. So, obviously 7 times 20, it's 140 grand. So, it's no small chunk of change, but because I was going after the cash flow model and these numbers looked really good, that's the direction I went. So on the good months, I would rack in about $4,300. And then obviously you'd want to subtract the 3,000 from that. And then that'd give you your cash flow of $1,300 a month. You'd have to take into consideration any repairs, but for the majority of the time I was getting, profit from anywhere from $1,000 to $1,500 a month. 2019, that was the big loss. That was the first year. I had a negative gain with the property management. I had to go through hire a lawyer to get a settlement just to get my funds distributed. And then at the end of the day, because all of the courts were so backlogged and with COVID, everything was closed, actually. We had to wait, and that just pushed things out. So I ended up taking a lower settlement, but I lost probably about $4 grand, but it was worth it just because I was able to get some money. And then last year, 2020, with COVID, running all the numbers, with tenants not paying, that was a break-even year for me. So things were getting better. And then when COVID hit, then it kind of flatlined everything. And now 2021, with COVID still continuing and some tenants not paying, our property management, ABC, is working with the tenants, going there, getting them, knocking on the doors, getting them to fill out the hardship form and really trying to work with them. And I am starting to see now some of the tenants play catch up with some of the rents. But with COVID, it's a tough time to be a landlord. You could have tenants not paying, not to scare folks, but you could have tenants not paying for up to a year, right? And there is a supposed plan to reimburse landlords or tenants so they can pay their landlords, but really the landlords are on the hook right now for paying the mortgage and making sure that you're able to sustain that. So I have members reach out to me asking me how things are going with Mr. SeeWing's network, and I'm like, hey, just keep holding the line, and it's a long game. But obviously, if you stretched yourself too thin in the beginning, like we talked about, then you may have to make some choices. And I know there's a lot of brokers that are looking to pick up properties from scared landlords right now at a discounted rate. So if you need to get out, there are options. I would say, don't bleed too long.
Yeah, John, if I make a quick point, in 2019, 2020, although I'm not a tax advisor, I'm not giving tax advice, with your portfolio with a negative paper loss, right, in the past 2 years, and especially 2019, then 2020, you have a break-even situation. But just so you know, you are able to get a lot of write-offs and tax write-off, for example, depreciation and passive losses. So again, everybody's tax situation is different. So the silver lining with your portfolio, John, in the past 2 years, consult your own tax advisor. But there's some benefit. There's some tax benefit with all the the extra costs that you have to incur. So again, so I think the worst is over. Hopefully, with you, with the rental income being increased all over the country, right? And hopefully, your portfolio will come back to normal, and you can get back to meeting your expectation in terms of cash flow and tenants, getting back on their feet and pay you like you deserve. So that's my thought.
Yeah, thanks. That's the most hopeful model. I think back to the tax issue. I wasn't able to write off the $6,000 loss, but the depreciation I was able to, the lawyer fee I was able to, and all of the expenses as well that came up. So again, yeah, you're right. Consult your tax attorney. I use TurboTax Live, just a little plug for them. I don't get anything from them, but they've been great. It's all CPAs you can call on demand and ask these questions too.
Okay.
In 2021, yes, let's see what happened. So we talked about diversification of funds. There was another card that I had with working in tech, is that I had a previous 401k that Mr. SeeWing's one of his speaker, actually two of the speakers, Bernard Reese and Bill Neville from two different firms, talked about options to do the self-directed IRA play for real estate investing. And so I went with the Bernard Reese Reassure company, where you're basically managing you got checkbook control over your IRA. And so I went in pretty detailed length on a separate presentation that Mr. SeeWing can provide if that's something that folks are interested in looking at. But again, diversification, and this was money that I had just kind of sitting in a 401k. And I thought, hey, this is a great option to buy real estate investment property. All income goes into self-directed IRA. I can't tap into it until I'm of retirement age, but hey, let's do this. It's got some money, get some money sitting around I can use. So I identified a property in Birmingham, Alabama with the Spartan Invest team. They were awesome. I've got a single family home near really close to a school. So it was basically, this was truly a turnkey. They were renovating it, finished renovation when I was signing the purchase contract, and they got it rented like that next week as soon as it went on the market. So the rental market is strong there. It rents for $835 a month. It's a 2-year lease, and I paid $97,000 for it. I think it's cut off, but it was a, they have the Performa Spartan Invest, and it breaks down if you finance it or if you buy it outright. And there's also a 9% monthly property management fee, which that was in 2020. I don't know if it's changed not or now. And then for the insurance, they recommended State Farm, and they had an agent there they recommended, and that's almost $780 a year, which you're going to pay that fee with your self-directed IRA checkbook control. And then, like I said, there's a video on it. If you want more details, I go into quite a bit of explanation on all the nuances of this. But that's a great tool to use, the self-directed IRA.
Yep.
So finally, my goals, right? $10,000 seems like a great magical number for me of passive income. That's still, this is the long game. This is a step-by-step process. You gotta jump in to even start the journey. So you've got to start somewhere. In the big picture, I'm going to evaluate my long-term goals, and with all of the duplexes and whatnot, kind of weighing if this is going to be a long-term hold. I mean, there's some that are just cash flowing every month, no issues. There's other ones that are, I had a, not to scare folks, I had a major sewage issue in one of the properties underground that they had to dig up the cement, and that was an unexpected cost of $4,000 for them to make that repair. And it basically, there was a huge storm that they had recently. Yeah, in summer, I know. And all of the basements flooded, and all of the sewage back flowed into the basement. And so they had to find where it was being blocked, and it was actually on the sidewalk side of like my driveway. So it was on my property. And the way it works is I'm not going to pay $4,000 out of pocket. Just the next month when I get all of my money distributed, they just deduct it from that. So this past month I had like a negative, I think 1,000 something after they deducted the $4,000. So this next month coming up, then I'll be positive and be able to cover the mortgages for this next month. But that was the highest expense I've had to date, is just that, and that's nothing you can really prepare for. And again, you got to think of the risk reward. Okay, the property prices are so low. If I spend $4,000 on a sewer connection, now it's upgraded and updated, and I never have to worry about it again, I'm okay with that. I mean, the prices are still so low when you take that into consideration, and the rent payback is going to be good here. And then, do I want to pay down the loans on the 7 duplexes using Mr. SeeWing's formula, right? You take the cash flow and then you pay down one of the loans with the highest interest, and you keep paying that down, extra payments every month, and then you just keep knocking them down one after another until they're all paid off, and then you have all that cash flow. Or I've also been thinking about adding an equity play, and Texas is going crazy right now. So trying to compete with all the other investors. That's there's some duplexes that I saw that came up on Ken Renner's latest email that you can get into early. And I'd go into an equity play. I'd probably go into Texas.
Yeah.
And I think
we have Florida also. We have North Carolina equity play. So we have a very diversified turnkey portfolio. You can diversify into, John, moving forward into the future, not just Texas.
Yeah. Gotcha.
It's all good. It's all good. All right.
And finally, just the last slide, just a self-promotion plug here, because I'm in the real estate network, and I am a licensed realtor now. If you do have any buying needs in California for a primary property, looking to buy or sell, or anybody looking to buy or sell, or move out of state, hey, we've got Keller Williams is the #1 realtor in the United States. We've got networks everywhere, all over the world. Hit me up, or if you need some information on a specific property, get you that, as well as like off-market listings or pre-MLS listings. So that's my information. And if anybody has any other questions about my experience or about the Buffalo, Niagara Falls market or Birmingham, please give me a call. I'm always helping folks out.
Well, John, thank you so much for your your presentation. You being very real, very transparent, very direct, very blunt about it, and which is good, right? Too often we hear, risk investors, they hear all the good stuff, or people just exaggerate their accomplishment, and they don't, they fail to mention about all the downside to real estate investing. So investing is, risk investing is, there are risk and reward. So each person, you have to understand, you have to know what you're getting yourself into, right? So you have to set your expectation. So it's not easy, if real estate is easy, every Tom, Dick, and Harry can do this, but it's not the case. We all learn about that. So your ability to overcome, all the challenges like John have, and John's journey is ongoing. So he's learning by doing, but most important things that he has as an attribute is that he's very positive, and he's very focused. He's very committed. He doesn't let things bother him. Even though a lot of things have come to his table with a lot of challenges, but so that's what's all about. That's my takeaway, right? So hopefully, investor out there, you know who you are. Many of you are newbies, but to us, if you think long term, if you have emergency funds to cover each of your rental properties, $3,000, $4,000, $5,000 cash reserve available, right? You gotta just balance your have a budget for everything. So for surprises. So that's my takeaway. So John, before I know this is toward the end of the presentation. What is your recap, summary, takeaway, and some sort of any inspiration as a last for any people out there, especially novice beginners out there that want to pull the trigger for whatever reason or not doing it?
No, I don't want to bring people down with any of my talking points, but this is the reality of it, and this is the long game. And so this is a journey that's going to be different for each of you, and learn from people who have done it before and navigate the pitfalls. And when you run into issues, navigate yourself out of it. I mean, this is how you learn, by doing, like you said, Mr. SeeWing, and you move forth and you will see success. I mean, cash flow, I am getting cash flow. So it's a good thing. Some months are good. Some months, you got that sewer issue, but I'm looking at the long game. This is not the short game. And so I think I think I do see the light at the end of the tunnel and the goal, and you just got to keep moving forward. And I think with diversification, like with the self-directed IRA, and then your level of risk, each individual is different. That you take action, you learn from us, and you find a market that you like, and that you've got a good team in place to help you, and you can do it. It's just all the tools are there. You just follow the instructions, follow the directions, and then pick which path that you want to go down.
Very good recap, and thank you so much for your time and effort, Mr. John Show. Thank you for everybody attending, and this is SeeWing Yee from the Yee Real Estate Network. Thank you for attending. Thank you so much, and talk to you in the future. Have a
Bye, everyone.
Good day, everyone. Thank you, John. Bye-bye.
Thanks to you, Mr. SeeWing.
Yep.